Learning objectives. After completing this module, learners will be able to explain money as a medium of exchange, enlist modern form of money, describe loan activities of bank, explain two different credit situations, discuss the terms of credit, describe formal sector credit in India, define self-help groups for the poor. Money as a medium of exchange. Money is a particular type of asset in an economy that people use to buy goods and services from other people or businesses. A medium of exchange is something that buyers will exchange with the seller when they want to purchase goods or services from the seller. While many things could be used as a medium of exchange in an economy, money is the most common and useful medium of exchange in our society. Money is an item which is used as a medium of exchange. Money works as an intermediary in the modern economy. It is used as a medium of exchange for goods and services, and it is also used for payment of debts. The barter system was replaced by the introduction of money. Before the introduction of money, grains and cattle were used as money by Indians. In this system, goods and services was exchanged for another goods and services. It was known as commodity for commodity economy. Modern form of money. Modern forms of money includes currency, paper notes, coins, deposits with bank. Traditional forms of money includes silver, gold, copper. Money is used as a medium of exchange because it is authorized by the government of the country. Its demand and supply can be controlled by the central bank of the country. In India, the law legalizes the use of rupee as a medium of payment that cannot be refused in settling transactions in India. No individual can legally refuse a payment made in rupees. Value of each good or services is measured in the monetary unit. Deposits with bank. People who have extra money can deposit it with banks by opening a bank account in their name. Banks accept the deposits and also pay interest rate on the deposits. In this way, people's money is safe with the banks and earns as interest. Demand deposit. People also have the provision to withdraw the money as and when they require. Since the deposits in the bank accounts can be withdrawn on demands, these deposits are called demand deposits. Advantage of depositing money in the bank. It is a safer place to keep money as compared to the house or a working place. People can earn interest on the deposited money. People have the provisions to withdraw the money as and when they require. People can also make payments through checks. Loans activity of bank. Loan activities of bank. Bank acts as a mediator between the borrowers and the depositors. People deposit their money in bank and get some rate of interest as extra income. Banks keep a small portion of their deposits as cash with themselves to pay the depositor who might come to withdraw money from the bank on any given day. A major portion of the deposited money is provided to those people who are needy of money for economic activities. In this case, money is provided as a loan with a higher rate of interest. Banks use the major portion of the deposits to extend loans. In this way, banks act as a mediator between those who have surplus funds, the depositors, those who are in need of these funds, the borrowers. Banks charge a higher interest rate on loans than what they offer on deposits. The difference between what is paid to depositors and what is charged from borrowers is their main source of income. Credit: the ability of a customer to obtain goods or services before payment, based on the trust that payment will be made in the future, is called a credit. Two different credit situations. There are two types of credit situations. In the first situation, a manufacturer takes credit during festive season in anticipation of increased demand for his product during the festival to expand his production costs, and later that situation has worked in his favor. He or she makes a good profit from production activities and he or she is able to pay the amount of loan. Therefore, that person becomes better off than before. In the second situation, a small farmer who has taken a credit for cultivation might face a problem. As crop production involves high costs on inputs like HYV of seeds, fertilizers, pesticides. Farmers generally take loans at the beginning of the season and repay after harvest. But the failure of the crop makes loan repayment impossible, which is times compel them to sell part of their land, which worsen their situation. For this term, he or she comes under the situation of debt trap. Terms of credit. The four terms of credit are: interest rate. The borrower has to pay a sum of money as interest along with the principal amount. Collateral. It is an asset that the borrower owns and uses this as guarantee to the lender until the loan is repaid. Documentation. Proper documents of borrowing with all the terms and conditions must be submitted. Mode of repayment. The mode through which the borrower will repay the loan must be clearly mentioned. Formal sector credit in India. There are two types of sources of credit in an economy, namely formal sector and informal sector. Formal sector. In the formal sector, loans from banks and cooperatives are included. Major portion of the deposited money is provided to those people who are needy of money for economic activities. In India, Reserve Bank of India is responsible for supervising the functioning of loan activities in formal sectors. In India, the rate of interest in informal sector is greater than the rate of interest in formal sector. Rate of interest in formal sector is supervised by the legal authorities. Informal sector. In the informal sector, loans from money lenders, traders, employers, relatives, and friends are included. In the informal sector, the rate of interest is supervised by money lenders, traders, employers who are provided money. The rate of interest is varying from person to person. There is no organization for supervising loan in informal sector. Lenders can use any method to get back their money from the borrowers. The incomes of the borrowers become less compared than the amount which has to pay due to the high rate of interest. Self-help groups for the poor. Group helps in pooling the saving of the members, who are mostly poor women. Members can get timely loans for a variety of purposes and at a reasonable rate of interest. Facilities of bank are not available in all rural areas. The poor have to pay a high rate of interest to the money lenders. It is difficult to borrow loan from the bank because of the absence of collateral and documents which are required for a bank loan. Major feature of SHGs. A typical SHGs can have 15 to 20 members, usually belonging to the same village. The main motive of the self-help group is to pool the saving of the poor people. Saving per member can vary from 25 rupees to 100 rupees or more, depending on the ability of the people and the strength of the group. It provides loan to their members at a reasonable rate. After a year or two, if the group is regular in savings, it becomes eligible for bank loans. Loan is sanctioned in the name of the group with the main motive to create self-employment opportunities for the members. Most of the self-help group work in a democratic way. Summary. Let us summarize what we have learned. Barter system. Goods are exchanged without use of money. Double coincidence of wants. In exchange of goods, both parties have to agree to sell and buy each other's commodities. In a barter system, double coincidence of wants is an essential feature. Medium of exchange. Money acts as an intermediate in the exchange process. Currency is authorized by the government as a medium of exchange. The deposits in the bank accounts can be withdrawn on demand. These deposits are called demand deposits. A check is a paper instructing the bank to pay a specific amount from the person's account to the person in whose name the check has been made. Credit